Like I was just telling Samantha, we're seeing the market down again. Certainly, it's not Q2 results driving the market anymore. What is your take on what is driving the market?
I think the MPC's decision to raise the cash reserve ratio was the key, a deal to sort of the changes we've seen quite recently. Obviously, it's made the fixed income market a lot more attractive as yields have moved higher, and we've obviously had this debate for quite some time now. The sort of polarity towards fixed income securities, given the high yields you have in that sector. But equities, I think long term still remain a pretty strong play for us. We're still bullish, more on the banking sector than we've been on any of the other names. The consumers have done pretty well since the last 2 years, and I think we've started to see some profit taken as well from that sector as well.
We're still on the consumer good sector. So far, just flour mills, Nestle, and Nigerian breweries have released their results, their Q2 results. Now, you anticipated that Q2 revenue would exceed that of Q1, of course, driven by strong seasonal sales and price increases. So far, what are your thoughts on the results we've seen coming out?
I think broadly speaking, they've been in line with expectation, with the exception of Nestle that published pretty weak Q2 numbers. But I think that partly reflects the fact that earnings or costs were not properly allocated within quarters. But management, I guess, will give more detail on that. But I think one thing that was quite clear was interest expense is clearly up. Its marketing distribution expenses were also higher during the quarter. I think that took quite a toll on Nestle. You recall that the company has been on quite an aggressive expansion drive. That expansion was largely financed using debt, and now that the factories are producing, they're now starting to expense, quite a number of, the interest related, costs, depreciation and what have you.
Well, Esili, I have to ask, you said you feel that the strongest earnings in Q2 would come from Nestle, Dangote Sugar, and Unilever. Now, Nestle has released their results. We're seeing quarter-on-quarter growth slowed about 2.3%, and operating expenditure certainly was up as well. Did this come as a surprise to you? And of course, do you still hold this view in terms of the three companies that you're going to see strong earnings coming from during Q2?
As I just mentioned, Nestle came in as a slight disappointment. We're still optimistic that Dangote Sugar and Unilever should publish much stronger numbers. As I said in that note, we've seen the market also, I think, hold a pretty similar view. Those three companies have led sector gains since the last month. Dangote in particular up about 28%, Unilever up by 16%. There's a strong chance that we see them, report in line with expectations. For Dangote Sugar, you've seen quite a substantial decline in the price of raw sugar or input costs that has played pretty well for the company's earnings in the second quarter. Unilever will benefit from a slight ease in its input cost, strong volumes, and also a slightly low base in the previous year.
Well, in the brewery sector, Esili, we saw Nigerian breweries also coming out with their results yesterday. Earnings in Q2, solid revenue growth of 23.9%. However, we saw it was still weaker than Q1 earnings. Now, given the tough trading environment, of course, the outlook for earnings in the brewery sector is not so good. What is your outlook for the brewery sector? And specifically, Guinness, we're hearing, is likely to be a drag on the sector's earnings growth as a result of high input costs and market share erosion. Of course, we're also hearing that SAB Miller has started production on its Onisha plant. All these put together, how is this going to impact the brewery sector going forward?
If I just sort of zone in on Nigerian breweries numbers yesterday, I think that they're weak on the second quarter, but I think it did highlight pretty strong volume growth, which for me is a big focus, given that its major competitor there, Guinness, continues to struggle with volumes. So numbers on volumes were up about 8% to about 3 million hectoliters. This is despite an 11% increase. I think that Nigerian breweries did pretty well in that quarter, given pretty tough trading conditions. Now, if I reflect that on the broader bear market, we still think that the market is still doing relatively well, still quite strong. And I think that also goes a lot to paint a pretty positive picture for the Nigerian consumer market. I think the Nigerian consumer is still quite resilient, despite, hitting sort of low levels on confidence following the increase in fuel prices this year. And I think that bodes pretty well for, the beer market. So we still expect the likes of Nigerian breweries to continue to record pretty strong beer volumes. It's likely you probably see another increase in prices later on this year. But I think that, beer volumes with Nigerians consuming about 11 liters per person, I think there's still plenty of room for growth over the next 3 to 5 years.
Okay.
Guinness, as you said, has suffered quite an erosion in its market share, but I think that there will be a pickup at some point over the next 6 to 12 months.
Okay, well, thank you so much, Esili Eigbe, an analyst with CIB Research, giving us his take on how he sees the consumer goods sector going.